Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another huge news week. We've got all that macro news, then crypto news to get through. I just want to start off with a little bit of housekeeping. So a big thank you to everyone that has been smashing that like button. We did make the decision to drop all those ads because of the issues we're having with scams. About 10% of you normally smash that like button. 1% of those smash that dislike button. So let me know what you didn't like about that video and how we can improve it if you are one of those people. And for the other, 90% of you, it is free to smash that like button. So please go to that effort if you can. Other little bit of housekeeping here, just to let you know, the website is going under a big upgrade at the moment. That should all be finished maybe even by tomorrow, but certainly very, very soon. You can register for updates when it goes back live. I know plenty of you have been waiting for the big upgrade. And also our research reports are now going out every week via email, as well as the other platform and the membership group. So these have been fantastic. The team continues to expand. We're up to 23 people on the books now at Nuggets News, and that has just really meant that the research can go to the next level because we're not distracted, those of us that are doing all the fundamentals with other jobs. I wanted to mention this video as well. Fantastic, an hour long. Kyle and I dove into a lot of charts the other night, but this statistic really blew a lot of people away. About how US debt in 10 years time is going to be around 350 trillion if it stays at the same rate it was this year, and that the average individual or tradie in this example here is going to have to be making $890,000 a year to keep up with the cost of living. So I'll explain that a little bit more towards the end of this video, and probably in a full interview with Steve Keen that I want to do this week. But things are seriously changing, and there's never been a more important time to understand finance, economics, everything that we talk about, as well as the crypto. So look, let's dive into the local news. Scott Morrison, maybe he did watch that video, and he's come out and said that people that earn $180,000 aren't rich anymore, and that's pretty much a sign of the cost of living. Now, good news finally for all our friends in Victoria. They have lifted a few of those restrictions. I still think it's ridiculous that we are not having wider conversations. I won't get into all that again tonight, but you guys know where I stand on that now that there's more data. One thing that I was really frustrated at, I'm sure it makes your blood boil too, the budget that we just had was one of the biggest in 100 years, and one of the only agencies that had funding cut was the agency where they exposed the sports rorts, overpaying for that Western Sydney airport land. So all the kind of dodgy stuff, and the agencies that are finding out all the corruption, one of the only agencies to get their funding cut. Australia is just heading down this path where it's almost embarrassing to see these headlines and see other people speak about what's going on. Whether it's individual MPs, whether or not this is even something that you consider to be good or bad, unethical. It's just time and time again, it seems like we just don't have any great leaders that aren't in the headlines. Now, this one really divided you guys. I wanted to have Kevin Rudd on because I think it would be an interesting conversation about the media. Even if I don't agree with all his thoughts or his political views, I just couldn't believe some of the feedback and how much that tweet exploded when I said, hey, I would love to get Kevin Rudd on. So if you want to see that interview, talking about his thoughts, the media, tech, let me know. If you don't want him to come on and you're really against it, again, let me know why as well, because you guys know I always try and do unbiased videos and present all possible thoughts and outcomes. All right, so half of Australia's paused home loans are still not being repaid as this amnesty period comes to a close. That's that fiscal cliff that we're waiting on. In terms of new startups and innovation in Australia, apparently this is our new hope, the buy now, pay later sector. And I really think that this is just glorified debt and credit cards, and that's why it's done so well in Australia, because we're just obsessed with debt. But I definitely don't think that's a game changer. Goldman Sachs, JPMorgan, earlier this week they called for 100 billion in QE in Australia, and it was only the next day. They've been picking up the breadcrumbs, as we all have, as the Aussie dollar did fall pretty hard. As the market braces for some QE. Now, Philip Lowe has done a little bit of a 180, something that I did predict. If the Aussie dollar got too high, they would have to copy everyone else and start doing the QE and talking about how rates are going to be lower for longer. Philip Lowe, not quite as big a backflip as we saw in the US, but things like almost green lighting, maybe that's a bit of an exaggeration, but encouraging people to get back into the property market and these risky assets because, hey, rates are going to be low for years, don't worry about that. And this was all kind of exposed in this interview that Joe did with the former RBA chief, Ian McFarlane. So I had Joe on. I know a few of you said that I rushed him a little bit, and it was because he said he had to go at a certain time. So I certainly was trying to get through a lot of questions, but we will do part 2 and let him speak and get all the good juicy stuff out, because this was a really revealing interview about what the RBA say and do publicly versus sometimes what they're really thinking. And I'm sure all of you are interested in those juicy details. Now, once again, the RBA, they're just back and forward. It was only a month ago when they reported they were doing some trialing with an Ethereum-based protocol for a stable coin. And now they've come out and said that they don't really see a use case for digital currencies in Australia. And as I tweeted here, just about everyone is talking about this these days. I think every big business is going to have a blockchain or crypto strategy in the coming years, but anyone that handles money, the commercial banks, governments, they're all working and launching these government or central bank backed stable coins, whatever you want to call them. And the RBA to come out and say that they just, they're not interested, they don't see a case for it, they're just going to be left behind. It's a bit of a joke. And maybe it's because Aussies are just loving their cash at the moment, and the demand for banknotes has surged. So this was, I think the figure I saw was $8 billion this year that they've had to print to keep up with demand. For a lot of you out there that I'm sure are hoarding cash and your gold and silver and your crypto to get out of that banking system when we had that spike in all the fear. Now, again, a change of tune from the CSIRO. They've got this study that's come out and shown that the COVID can survive for up to 28 days on surfaces like banknotes and phones and ATMs were a few of the examples that they gave, when a lot of other studies had shown that it wasn't an issue at all. So maybe this is just another tactic in that big war on cash. Our relationship with China, nothing is really getting resolved there. So cotton was the latest one to be targeted with these tensions. Look, Australia is seeking clarity from Beijing on coal. This is hitting us where it hurts. Coal, iron ore, these are some of our biggest exports. And at a time when we're already in recession, this is not what you want to be happening. So, look, Australia says it's ready to talk about this trade dispute. And, I'm sure they are once we start seeing those numbers come in and the reality hits home with how bad things are. China's share in global exports, so that has doubled in the past 15 years. Maybe they are looking to hurt Australia because they want to start exporting some more of these similar goods. I'm not sure, but the whole global geopolitical chessboard is changing, and I seem to be saying this every week, but it's becoming a reality. It's literally on our doorstep now, and we're starting to see those people that we know affected by it. Chinese companies rushing into the semiconductor sector, multi-billion-dollar government plan to boost the industry to counter the growth of this technological pressure from the US. So the US are going to do the same. They're going to point that money cannon at things that they need to bring back to home soil and get rid of the reliance on China. But Australia aren't really doing that yet. We don't seem to realize how things are changing with that global supply chain. So China snapping up Japanese government bonds. They've ditched so many of their US bonds. We talk about this every week. And Japan is possibly becoming the cleanest dirty shirt in the laundry. They don't have a brilliant economy. They've got a heap of problems. But all of a sudden, maybe the yen is less bad than some of the other situations that we see around the globe. And that's what a lot of people still don't understand, that relevance. Now, backflips. I seem to be saying this about every news story lately. The World Health Organization have come out and said that it's this irreparable damage from these lockdowns. Now, I personally thought, and it's seeming that the evidence would also support this now, that the best way to try and deal with this was you go hard early, your 4 to 6 week lockdown, stamp it out, try and get back to normal. But here we are doing the opposite. a couple of cases here and there and still in lockdown in Victoria. Obviously, they've repealed a little bit of that today, but it just does not make sense. And it's the mental health, the small businesses, all those things that are hurting now, which is far worse than the handful of cases a day. I think we've got enough evidence that it's not as bad as we first thought. Now, just to present both sides of this argument, we are starting to see some other data come out in Sweden to balance that equation, that it's still a little bit of a moral cliffhanger because this case for herd immunity isn't yet proven, and we are seeing people catch it for the second time, and we don't know if that's because of a mutation or they don't get immunity. So they're the little unknowns, but I think the fact that it hasn't just ravaged a lot of these places that didn't have hard lockdowns is enough for us to say, let's push the conversation in a different direction. Now, Johnson & Johnson announced that they had to pause that study, unexplained illness in a participant. I've always said, or particularly more recently, that this is far more complicated than we know. And I think it has, genetic components, autoimmune components in it as well, which all plays into that reinfection I just spoke about. It's not as simple as just a normal cold flu virus that we can protect against if we look after the airways. It's far more complicated than that, and that is what we are finding out now. All right, so in terms of monetary policy, these next few items I think are turning points in history. So this is the CFTC chairman. We know the former chairman was really supportive of crypto, Mr. Giancarlo, but here we have Heath Tarbert coming out and saying, let me just basically say how impressed I am by Ethereum, full stop, period. I really think that they're going to have to adopt this and embrace it compared to China that is already launching their central bank digital currency, whereas America's got a little bit of egg on their face now because they're behind. Now, in the same week, we have this video come out. If you haven't watched this, head over to the IMF website. This, as I said, sent shivers down my spine. We've been talking about the war for control of money between central banks, governments, retail banks, and then you've got the crypto world over there as well. And the IMF have now publicly called for a new Bretton Woods moment. If you don't know what that is, have a Google, read up about it. Basically, almost a reset of the system. And I know plenty of you, the conspiracy crowd, if you want to call it that, but all the conspiracies are coming true at the moment. So I don't say that in a negative or condescending way. Calling for this reset of the system and saying that basically the US having the world reserve currency, it's becoming a burden. We've spoken about this a lot, particularly with Brent Johnson in those US dollar milkshake, thick shake theory videos. Either way, all these headlines, something big is coming. And we thought that maybe, 12 months, a year or two, these things are happening by the day, by the week at the moment. So don't wait till it's too late. Get prepared, understand this stuff. Even if you don't buy any gold or crypto, open your accounts, understand how to do that if you need to. So look, head over to that website and I'll let you guys watch that video. Now, Euro area, UK, they got some great bang for their coronavirus stimulus billions. So good bang for your buck is the message here about this multiplier. I'm saying that the US didn't really, and Japan not so much. All these headlines here are backing more heavy hand of the policymakers, in the terms of monetary policy. So the Bank of England is asking banks to get ready for negative interest rates. Remember 6 months ago, a year ago, saying that they're no good. It's the same thing in Australia. Can you imagine if the RBA had to ask the banks if they're ready for it? The funny thing is, what we saw in other countries was that their software actually isn't ready for it. So some people were joking, this is a little bit like Y2K, the year 2000, when everyone sort of thought computers were going to crash. But in all seriousness, a lot of these banks' software aren't made for negative numbers with interest rates, and they will need an upgrade. So this is what they're talking about. The bank systems are bad enough as it is, but this is just another thing that's maybe going to hurt the banks and present a bit of an opportunity for crypto and alternative monies. So the World Bank has resorted to shaming these G20 countries and hedge funds for lending poor nations money. You guys know that this is the playbook. Put them in debt, and then people are accepting of debt just the same way that the governments are. it's all good, it's all roses at first, but then you start to have to pay it off, the interest rates, it all sort of builds up on you, and before you know it, you can't pay and you've got a default, and that's when you hand over the goods. And these banks that gave you the money, they didn't really risk anything in the first place, and they get to take up all these assets. And we've already seen defaults in some of these African countries to Chinese loans, and that's when it gets political and the tensions rise, and it can turn to hot war and those types of things, which we don't wish for that to happen. But this is the money being the root of all evil. This is a real big important concept for you to understand, because a lot of people don't realize that that's what the IMF and the World Bank and those other big institutions do when we're sitting in our lounge room in Australia. So look, they're trying to scare people now. A crisis like no other. The IMF warns of the global economy could be permanently scarred. IMF meets with global economy in historic recession in this eco week they've got coming up. I think the Fed are also going to be talking about crypto at this meetup. Top World Bank economist says financial crisis could emerge from the pandemic. So once we get over the lockdown and the pandemic, that's when we are going to go into this financial crisis. IMF joins Powell and Lagarde urging governments to keep spending, so keep those printing presses going. Central banks have already printed heaps. Now they want the governments to print heaps. So it's all about this huge issue that they see getting closer and closer, and they're trying to convince everyone to keep throwing money at this problem. Otherwise, everything is going to collapse. That's basically the long and short of it. The US budget gap triples to a record $3 trillion on virus relief. Again, but the big boys are telling them you need to keep spending, you need to keep doing more, even though you've already done that record amount. The big banks are confident that the US economy is not facing a pandemic spiral. So, Jamie Dimon, bullish on the economy. He makes money from lending and getting people to be positive enough to borrow. So, hey, no surprises, he's there saying that. This is the US twin deficits. You can see the budget balance, which is in a big deficit, and the current account balance. The growth that we've seen this year is what I want to talk about at the end. So these are some of the South Africa, UK, and right up here at the other end of the spectrum, we've got the US with those twin deficits. The Treasury market may be so big that the Fed can't step away. So this is talking about how the bond market has got to this point now where the intervention and to move it, to save it, it's taking tens of trillions of dollars. This is what I think the central banks are going to have to step up and buy. The Fed are going to have to end up with this balance sheet at $30 or $40 trillion in the next year or two to prevent that from collapsing, because of the sheer amount of things like negative yielding bonds that no one's going to want to hold if we start to get inflation. So if we zoom in and look at the micro level, we had another big uptick in the jobs lost this week. So this is turning into permanent job losses from temporary, and this is just starting to grow now. We can see how that was gradual in 2009, and then it takes years and years to recover. Jobless claims hitting the highest level since mid-August, so that official figure was nearly 900,000 for the week ending October 10th. So it's still, these are first-time claims. So every week we're still getting 1 million people, lose their job for the first time. Retail sales have actually blown expectations, but dark clouds are gathering. We know that there was that aggressive spending, a lot of the stimulus, and people went out. We're now getting data out of the US that a lot of this is from stockpiling, people stockpiling food, those types of things. Whereas the manufacturing, those good jobs that we want, and those sectors of the economy that feed through that whole supply chain, they're still declining all through September. Inflation is making a perceived and persistent comeback. We've talked about how the price of food, the cost of living is going up in a lot of these cities. I think it's the excuse for people to finally move out into the country. This is the stimulus and debt deferral economy. So Americans splurged. If you've got the time to read over these sort of articles, I think it paints that picture for you and helps connect the dots on how the economy works. So certain sectors have bounced back well compared to things like credit cards, where Americans are a bit hesitant about going back into debt. used auto dealers and parts. So many people are now buying secondhand cars and not going to upgrade, or they're even selling their new cars. People aren't obviously buying from gas stations because they're not out traveling, non-retail stores, food and beverages, people aren't going out, general merchandise suffering because people are buying online, department stores, that's just been on the decline for a decade now, clothing stores, building and gardening, everyone went out and wanted to start planting some seeds, cafes down, and then sports and hobbies, people are starting to ride that bike, do their hour of exercise that they're allowed to go out for. So getting through some of these stock market, Wall Street headlines, world stocks zoom to 5-week highs on the hopes of these stimulus. Now, if we don't get this, I probably think we're not going to get it until February with the way that things are looking. But we'll get to the US election headlines in a second. But the S&P 500 buybacks, you can see that behind me here. We know that this has been that slap on the wrist from the Fed. So it's down at these levels that we haven't seen since, around that financial crisis time. World value versus growth. I'll just refresh this page. It's not just a US theme here. More and more people are just chasing momentum in these, growth stocks. It doesn't matter if it's not earning money at the moment. It doesn't matter what PE it's on. It's a growth stock, and that's where money, I think, that's where the bubble is. Valuations, we've still got a little bit higher to go. This is for all sectors here compared to back there in the dot-com bubble. So that's probably the only metric which isn't at that record high. Insiders remain big sellers of all these stocks. Earnings per share beats versus those estimates. I spoke about this at the beginning of most earnings seasons, that it's just a game now where you drop your estimates and make sure that you beat them, and then everyone's happy. The actual number doesn't matter so much. So the percent of active funds that are beating their benchmark, I just spoke about that as well. So these are the nightmare valuations driven by the young, dumb investors, the poor Robin Hooders. They get a bad name here, don't they? But it's, a lot of the other side of the coin here, the people that are selling them these stocks, or the market makers, they're encouraging this type of behavior, and it becomes self-fulfilling. The way that they're hedging with the options activity that we've spoken about, the speculators, look at these wild swings from long to short on that little pullback, and now we're back with people betting long. So they're making money off them. They don't really want to blow up their accounts per se, and that's why these things keep just being pushed higher and higher. But it's going to pop at some point because there's low liquidity. Someone's going to try and realize their gains, and that's when the momentum can start to the downside as well. A lot of the CLOs, the collateralized loan obligations I've been talking about, those pretty packages where we put in those dodgy loans and sell them as investment grade, we're starting to see these GFC type headlines where, hey, what you did was unlawful, making those bets. Apartment rents are plunging, but we also know that just general rents in the cities, we've got record levels of vacancies as people move away from CBDs. The percent of US zombie firms still growing every week as I report these figures. These high yield spreads. So this is all these risky loans, and from what we see here with the banks reporting this tightening of credit, so they don't really want to lend at the moment. And this figure tends to be pretty closely correlated. It does lead a little bit here. So we'd expect the high yield to jump here, but it's not. People are way too complacent with the reality of how many companies are probably going to fail. So if this number was allowed to unwind and for these businesses to actually default, then we would see this huge spike in these yields. But it's all been manipulated by the Fed at the moment. Micro-targeting is far less accurate and persuasive than many make it out to be. Recently, you've probably seen a lot of those documentaries about how big tech is abusing our data and targeting what we do. This article is talking about how there's a lot of room for improvement, and this is going to happen more and more going forward. So we've only really just seen this get started. Another sector that's completely beat up at the moment is the oil sector. So this is a long-lasting blow, and we've heard peak oil seems to be coming into the equation again lately. It's the most hated asset class if you're a contrarian. I know a lot of you are. You probably want to start doing some research in this area. Just look at that there compared to some of these other stocks and even certain countries like the UK. Massive underperformer lately. Money can go to where it's treated best in the short term, but longer term, when everyone's on one side of the boat, it's worth considering going on the other. Here we can just see that graphical representation of how much the clean energy stocks have outperformed the traditional energy. So we are seeing a little bit of a rotation there, I guess, in some ways. I've got another couple of articles I want to talk about there. This one here is just talking about those extend and pretend bankruptcies. It's the same across Europe. So, Germany, France, Spain, the central banks are telling them to prepare for this surge in bankruptcies when they were kind of the ones that were responsible for prolonging it in the first place. This was an article and a video by Maren Katusa. So Maren will be back in 2 weeks' time for our monthly commodities update, talking about that performance that we just showed. And these days there's an ETF for everything. So this is the environmentally friendly, renewable, this ESG term that people love. And a lot of funds were saying, hey, we're going to be ESG friendly. That went out the window a little bit when it became all about performance and the rules. Everyone just sort of said, hey, it's about protecting capital. But now it seems to be all the rage again. People want to invest in that clean, green theme. Another sign here that markets are bottoming. So this is Jefferies. These guys are dropping the coverage of 11 of the oil companies because the analysts responsible for the coverage, they've left the firm. So commodities have been left behind for decades. Now, this is the capitulation when people stop even covering sectors. That normally means that, again, that contrarian hat on, the bottom might be near. Mysterious mega flows rotating through the world's biggest tech ETFs. It's all a big game with this hedging. I don't want to get into that one too much here because we don't have the answers on why this is happening, but we've seen articles like SoftBank and how they were playing or hedging against the Robinhood investors. It's all a little bit mysterious, and look, I'll continue to report on it if we do get those answers. This is one last article I want to mention here about the oil and gas massacre. That whiteboard video I did a couple of months ago now, it is that harsh reality. So nearly $100 billion of bankruptcy debt that we're sitting on top of, extend and pretend at the moment. These numbers are only going to grow, and that's why I think the Fed are going to have to step in. All of a sudden, the banks are not lending and are rolling over those loans to the coal, the oil, and the gas companies. They're happy to push for solar. A lot of these companies and sectors, different countries have the incentives in place. So wherever that money is flowing, that's where investors follow. That's where the banks are happy to lend to. They know they've got the backstop of the incentives, as well as the Fed and the central banks now. All right, so this is another chart just showing the change in actively managed funds. So all that money that's rotating out and just going into these passive index ETFs. So whether it's the renewables and energy, like I just mentioned, there's an ETF for everything these days. Now, I know it's probably all well and good because a lot of the time they do massively underperform. I thought I had another article there for you, sorry. A lot of the time these funds do underperform. So there's no point paying a manager who's going to actively manage your wealth when they are constantly underperforming just the benchmark and the indexes. But when there are storm clouds gathering, are those individual investors going to have the edge? Are they going to protect themselves? They're the sort of questions that we have to see. Good, active, experienced managers are more important in volatile times, and that's definitely what it looks like that we're heading into now. So the big tech companies, Twitter refused to unlock this article. Trump's had his accounts deleted. They seem to be playing favorites here as we head into the election. I think one thing people are forgetting are the different taxes that Biden has spoken about as well. So the big focus has been more about the ordinary income, but it's the top rate on capital gains and dividends that he's talking about changing as well. So it's going to affect all areas of those wealthy people's portfolios as well, not just their income, the dividends, the capital gains. So I think that's probably the bearish outlook for stocks on a Biden election. This chart shows it well here. But on the flip side, they're probably going to do this massive fiscal spend. And at the moment, the market doesn't seem too worried about those changes that I just mentioned. They're acting like this is going to counterbalance it with that huge fiscal spending. Alrighty, so Mark Zuckerberg. I really like how this week we saw Coinbase get behind Bitcoin. I've got an article in the crypto section. Obviously, Jack Dorsey and Square have invested big in Bitcoin. I'd love to see Mark Zuckerberg just get behind Bitcoin rather than this Libra thing, because at the moment it looks like that's not going anywhere until central banks get regulation in order, but also launch their own coins and products. So that could be, I guess, Mark's opportunity to get back on everyone's good side going forward. Washington's 1-2 antitrust punch is about to smack big tech. You guys know that they're being dragged in front of Congress regularly here. These are the PEs on some of these tech stocks as the money's just flowed in through those passive indexes and ETFs. So huge PE for Apple compared to even last year, 6 months ago. And what we are now hearing is some of these value investors and the value funds are just shutting down. So people like Roger Montgomery in Australia, look, there's a lot of opportunities when we have corrections and they have cash, but some of these fund managers that have got this strict policy, you've seen how much value has underperformed growth, and they're just packing up. Now, we've also seen the short sellers, they've all had their accounts blown up. So a lot of those guys that were maybe market stabilizing or the other side of the coin, they're no longer in the market, and these are all mechanisms that can just become self-propelling. So JPMorgan says that real yields are negative on 31 trillion of bonds. The actual number of negative yielding debt is back to around 16 trillion from memory, and that was one of the predictions I made at the start of the year, that it will bounce back to that level. Here we see things like the gold to Dow ratio. You can't see that behind me there, guys, but it's near all-time record lows, 50 years. This is making commodities look very attractive, and Goldman Sachs has joined the party now. Dump the dollar, buy silver. I think it's pretty obvious that they're happy with how much they own when they start coming out with statements like this. Physical gold held in ETFs has continued to climb. We've got the world's gold and silver coin production versus money creation here. This is another great graphic just showing that for every 1 ounce of silver, so that's what, $20, $25, there's $67,000 of global money increase. And for each 1 ounce of gold, around $2,000, we're looking at around $900,000 of money supply. So this is how out of whack things have got at the moment. This tiny little dot compared to this huge dot here. And think about the education. So when we saw the $1,200 stimulus checks, a lot of people bought Bitcoin. Think about it as that percentage grows and grows and grows. Maybe if it gets to 10% of people. So this is the problem that I think central banks are going to run into. Print $10 trillion. What happens if 1 trillion of it immediately goes into Bitcoin, goes into gold, goes into the thing that they see as being a better place to store their money as the fiat, compared to the fiat currency that's just being printed into oblivion? So this is the stat. I'll show it to you once again. If you just compound this 25% a year, as we've seen the US debt and US M2 money supply grow this year, they've got 100 trillion unfunded liabilities. This isn't a stretch to think it could happen. This is the average wage that you would need. So a person that's on 75K a year now is going to need 890K. That's by 2030. So, 2010 wasn't that long ago. This is in 10 years' time. Are you going to be earning 890,000? And the other one here is that US debt. So it's currently around 26, 27 trillion. That's going to be sitting at 350 trillion in 10 years' time if all else remains equal. All right, I'll just have a quick drink and we will get into the crypto news. For those of you that haven't watched the interview with Raul yet, that is now on their public YouTube channel. So one of my favorites, jump over there and check that one out. We do welcome around 50 new members this week to our group. So we're sitting at around the 4,000 mark. We're very close to launching that new platform. Head over to the website and register if you're interested in getting notified when that does go live. So look, we're continuing to work away, but very close. I know plenty of you don't like Facebook, and that's why it's so important to build these decentralized platforms like Ethereum and others are working on. And as Vitalik says here, it's really become obvious lately with the election and other geopolitical world events, the censorship that's happening. So it's not quite there yet. We don't have user-friendly apps built on Ethereum, but I think probably within the next 1 to 2 years, if someone can build a good front end, a lot of people are going to get off those platforms for good. I mentioned this in the macro section. I wanted to just mention it again here before we get into all the headlines about stablecoins, that Libra aren't going to be launching anytime soon. Now, in China, they had this airdrop, so 2 million people signed up for the lottery where you get some free money to try out the digital yuan. Now, nothing in life is ever free, so obviously they've given away all their personal details and they're now part of that tracking system, but it just shows you how far ahead they are compared to the RBA in Australia that's saying that they're not even going to consider doing one. They don't see a use case. America isn't any closer either at the moment. So look, Chris Giancarlo's talking about proposing that he has the pilot, because otherwise it just looks like they're not getting anywhere. But look, Bank of Japan are the latest to say that they're going to start experimenting very soon. We've got the e-corona in Sweden saying, look, all or nothing, it's the digital age. Come on, let's get going. Let's launch our stable coin. New Zealand talking about the power dollar with a bit of a partnership with Price Waterhouse Cooper there. Germany turning to blockchain for the energy solutions. I know plenty of you are fans of the energy web token, so some good partnerships there. And look, Germany have always been leaders in the sort of industrial space as well. So it is very exciting if they start using some of these projects that are loved by the crypto community in the mainstream sense. Russia talking about issuing digital ruble. They've got the consultation paper down pat now, one by one. I'm just reading out these countries every week. Chinese firms talking about blockchain for the chemical uses and cutting financing costs. This was the second Russian article I wanted to get to, sorry. So in Russia, it's almost like the new China where every second week Russia banned crypto, but they're now talking about unqualified investors being able to buy up to $8,000 of crypto. And once you can get into the ecosystem, then your mate, your friend, your sister, whatever, can buy you the next 8,000. So there's always a bit of a workaround. No matter how you ban crypto, there's always going to be a way in. The Bahamas want to make their digital sand dollar global. So this is where these little countries are going to see a bit of an edge. And look, everyone wants the world reserve currency to begin with, but look, maybe ask the US how that turned out. Around 100 Italian banks are officially on the blockchain. They are talking to each other. They are doing payments using their own system. And this is one thing that I did predict and say the banks would use their own blockchains and ledgers. Gemini are partnering with crypto payments processors in the UK. It's the hottest area, isn't it? This not traditional finance, not quite crypto. It's this sort of fintech in between where everyone wants to get into the payment space. This billionaire in the UK calling DeFi revolutionary technology. These are the sort of things that are great to get the average individual interested in the crypto space. Tether volume hits 600 billion as it attempts to take on Bitcoin as the benchmark. So look, I do think that Tether could possibly, or maybe stable coins could possibly overtake Bitcoin and Ethereum in the short term. But longer term, these two are always going to be superior because Tether is pegged to fiat currency, which is being printed by the trillion still. USDC, interestingly, is talking about heading over to Stellar blockchain and getting off Ethereum, maybe because of the high gas fees. But that is good news for Stellar fans. A Ripple CTO. Now, this is a big mistake. He sold all his ETH for $1. Maybe that's why he's not a huge fan of Ethereum. But guys, never sell too early. Never sell all your coins. If you're in something good and you believe in it, even if you sell 90%, never sell it all, because you don't want to be the guy talking about how you had 40,000 Ethereum that should be worth $15 million these days. Now, Super Smash Brothers players to receive their salary in XRP. I tweeted about this and said, I don't know if this is necessarily a good thing because XRP isn't a store of value like Bitcoin. So when we're educating people to get a bit of their salary in Bitcoin, it's to hold it. If you start getting these gamers and they're getting their salary in XRP, that just means they've got to sell it every week to pay for their rent and their food. They're not going to hold it all. What are they going to live off? So look, there's so many other things that I think XRP should be doing, and they seem to be just doing these weird pivots. But anyway, let me know what you think of that down below. Seed Club is the latest incubator with the June token here, backing early stage projects. And there are some Aussie guys involved in this one as well. So keep an eye on that one. Circle, this one had everyone talking. So this is giving people universal basic income. Again, nothing in life is free, guys. You've got to sign up and give them your details. But if you're not fussed and you want some free crypto, head over there and check that one out. DeFi yield farming tokens meet social tokens. So this is Rally, another self-governing crypto network for content creators. A lot of you have asked me to share my content there, so I will start doing that for you as well. We have had some fraud going on in the NFT space. As soon as there's money anywhere, the scammers start coming in. So look, make sure you are checking who is the official owner of those tokens that you're buying. Tokens now selling for $200,000. This Batman NFT. One thing that I didn't like that's going on in this space here is some influencers starting to sell, ridiculous amounts of these tokens, and there's no plan going forward to give them use or anything. And I honestly think it is an obvious cash grab now that people are starting to wake up to. But we do not want to spoil the crypto space. As soon as we get onto a good thing, it's the the scams and the money grabbers come in, and it's something that really frustrates me. So look, please be aware of all that. Some good news. So Red Fox have announced that they will be setting up in Decentraland with their headquarters there. Decentraland have started to show us some of these 3D models, and they are going to be improving graphics very shortly as well. For those of you that love a bet on the coming election, this is another app that's going to pay your gas fees for you. So Omen is built on top of the Augur prediction markets, and DXDAO are paying gas fees. So I know you guys are always interested when there's an app that's paying your fees for you. In terms of the Web3 news, we've got the Neo Foundation. So recently Neo have got on board the DeFi train. So now they're getting on board file storage and digital identity as well, joining that Web3 space. Filecoin, this was a much anticipated project. I think it's very, very fully valued, maybe not overvalued, but one that I won't be investing in unless that valuation comes right down. So look, I think it launched at something like $200-300 billion, more than Bitcoin as its fully diluted market cap. So look, you can see the percent of tokens. Did I have it here for you? Look, the point is at the moment, there's not a lot of tokens circulating, but either way, great project, great team. I'm not so convinced about that valuation. Look, similar story with the graph here. They're only selling 4% of tokens in the public sale. The team, early backers, advisors, look, huge percent of tokens that are being held. And I think these centralized projects, they're probably going to be forked. Someone is going to copy them if they're not being generous enough to the community, who are probably the lifeblood of a lot of these projects. So look, I'm happy to get the Graph team on and talk about it, because I think this is a fantastic project, but I think there's room for improvement with the tokenomics. Graph was one that we covered in our Crypto Spotlight report. These are going out every week, guys. This week, we found a project that I've not seen a single mention of anywhere by anyone. So it's always good when you're finding something that is completely hidden. Members have got that one, guys, that is in the unit section. You should have got it emailed to you as well. I put out another one today as well. So you guys are getting them, like I said, pumped out, at least one a week at the moment. This is the SkyDB. This is by the guys over at SIA. So this is their decentralized file storage, computation, Web3. You guys know how bullish I am on all of that. IOTA have launched the version 0.3 of Pollen as well. They continue to upgrade regularly at the moment. And this is a bit of a taboo topic, I know, the adult entertainment industry, but Swag Finance have launched their token and their governance, and it is one industry that can greatly benefit from decentralization. So adult entertainment meets DeFi, one that I know plenty of you will be checking out. Okay, so onto the exchanges. Binance have burnt a record 68 million. Good news for BNB holders there. They're also giving away some grants. They've already chosen 6 projects for funding all the DeFi there. So a lot of money has been thrown around in that space, whether or not it is too late or there's a lot of copycats, but that's where the money is and the funds continue to go there. inequality was the Ethereum-based IPO that was run by a lot of the Bitcoin maximalists. So look, it only looks like it's had 300 investors. Look, I've probably already said enough on that. I just think it's a little bit hypocritical to bag Ethereum for years and then run an Ethereum-based IPO on Ethereum. Numeraire, one of my favorite projects. It's been an extremely good performer since our head of research, Matt, covered this one for you. So they're now offering $50 million to bring your data and fresh signals over to their research firm where they have their quants and all their different information and data that you can plug into there as well. Chinese DeFi project Dodo raises $5 million from top VCs. I think it was Aave have raised $25 million this week from blockchain.com and other investors. So has the DeFi bubble popped when VC investors are still putting money in? Absolutely not, guys. We've just had that first leg, a bit of a clean out, and I think we're about to head higher again very shortly. Andre did come out and say that he's not here to please speculators, but he did do his first tweet since everything blew up, and he's still there, he's still working, but he definitely wants a little bit more privacy in his life. Uniswap governance is, look, a little bit split at the moment because Dharma owns so many tokens. They're one of the mobile apps that was also paying gas for you. You'll remember. I'm not sure if they're still doing that. But because they have so many Uniswap tokens, they now have a very strong hand in governance and say of what happens. So this is another interesting problem that does have to be solved. Bancor have had their big upgrade. They are trying to solve that problem of liquidity providers losing out when we have a lot of volatility eating into your funds there. So they've got a new approach, single-sided liquidity. You do have to get whitelisted for that. But very interesting concept nonetheless. And I think Bancor is one that's come back from the dead in crypto winter. I wanted to mention this article about brain wallets. If you don't know what they are, it's basically when you choose a common word or phrase as a password or to generate the private key. And so what we can do is with not even that supercomputers, normal computers can start to brute force attack it. And if you've just chosen a really common word, you know, they can guess that and guess your private key. So just be aware of that. If you ever download a wallet, and these aren't that common, but if you download a wallet and it says to choose a common word to set up your wallet, it's probably one of the worst things you could do. I'd encourage you not to use those wallets at all. Coinbase have added in-app purchases to the Coinbase wallet there. I love the article we had this week about Brian Armstrong integrating Optimism. So this is one of the best, most promising scaling techniques, and they've now integrated that into the Coinbase wallet. So yes, Bitfinex and Amisa Go have teamed up. That hasn't taken off yet because other exchanges haven't really integrated OMG network. I hope Coinbase do next, because as soon as you've got a couple of them, they can all start to use this, and it's going to free up Ethereum massively. It's going to make fees way cheaper for you. You're going to be paying a cent instead of $10. And look, everyone is happy. And we're really seeing a lot of projects start to scale now, which is great. Over on Coinbase Earn, you can earn all the different projects. I think it's about $200 of crypto now, and they are running one on DeFi project Compound at the moment. Coinbase is sponsoring some Bitcoin core developers I mentioned earlier in the episode. So look, Bitcoin doesn't seem to be developing as much as what we have going on in other ecosystems. Slow and steady wins the race, that's fine. But look, I do love the fact that we've now got Jack Dorsey and the likes of Twitter and now Coinbase supporting Bitcoin core developers because they do want to see it improve. Upgrades on some dexes here. So this is Paraswap. They're going to be integrating StarkX, the scaling technologies there. Aztec, the private DAI, so private stable coins, they're also going to be implementing ZK technology, so you can have privacy and scaling. This is the Arbitrum testnet. So this is the first fully featured, open to anyone, optimistic rollups testnet. So it's gone from the Ethereum testnets to its own chain. So this is like an Arbitrum rollup side chain where everyone can experiment with their scaling technology. And once that's out, then things are really going to explode once Ethereum and the main dApps have all scaled. The DeFi Pulse have released their index for safety ratings on all the different projects, which is a welcome change with some rug pulls recently. Nearly 1 million Ethereum would have been burnt if we had have had the fee burn proposal go live a year ago. So that's really good signs. Vitalik tweeted some slides about the fee burning proposal because it seems to be taking time to get approved. I tweeted back at him my stock to flow model of Ethereum, and it's literally off the charts because once issuance goes negative or inflation rate goes negative, then you have a kind of exponential, an infinite function. And if you want to be bullish on stock to flow, then you need to be bullish on the negative inflation once this fee burning goes live on Ethereum. All right, so more than half of Ethereum hasn't moved in 12 months, even with all that use in the DeFi space. That is a very exciting statistic. We've seen these stats like 5 exchanges hold 10% of the whole Bitcoin supply. Grayscale have just had their best quarter, another $1 billion raised. We really saw markets have a bit of a leg up when Grayscale announced that the ETH Trust is now reporting to the SEC. Stone Ridge, they followed in Square's footsteps. MicroStrategy, $114 million investment. And like Raul says, they're calling it a primary treasury reserve asset. Fidelity followed up with their take on how all investors should have between 1 and 5% allocation to Bitcoin in their latest report. And think about everything I've just mentioned, all those other companies. Sorry, a lot of these hodlers that are in profit, they're not selling anytime soon. So the stars are absolutely aligning for the next stage of that bull market. Now, remember, everyone is going to be staking ETH 2.0 going forward. At the moment, Rocket Pool is becoming the leading project and candidate for people to do that. They've had a few test nets recently that have all gone pretty well. Adam Cochran did a great thread about this, and another project that we covered for you guys at 30 cents, and it hit $3 this week, so another 1,000% there. Covered in my write-ups and covered in our research reports. Ethereum 2.0, the Zinken trial, it went okay at first, but unfortunately it did crash. A lot of those nodes went offline. We're going to see how quickly the devs can iron out those bugs and get back to the next phase of testing. Hopefully they don't have to push it back too far. We did launch another coding language this week, hopefully bringing in some more developers into the Ethereum ecosystem. Bitcoin on Ethereum has taken off this year, but it is also coming to Polkadot in Q1 next year, which is exciting. Coinbase is listing wrapped Bitcoin. Great news there. Taproot. So these are a couple of the upgrades that are coming to Bitcoin. So this is, was it Schnorr and Taproot as well? These are scaling technologies. These are privacy technologies. I cannot wait for Bitcoin to have these. And I'm not sure. I think it's a soft fork. I don't think we need a hard fork or a risk of a chain split to implement these. Final couple of pieces of news here. There were some rumors going around that Elon Musk might be getting into Bitcoin because there were 3 different ATMs seen at the Tesla Gigafactory. A Russian mining company is joining that geopolitical battle for hash rate and starting to mine in the Arctic, so they won't have to worry about keeping those miners cold up there at least. I tweeted this out during the week. So we did have that FUD. OKEx froze withdrawals during the week. We heard that one of the founders had been arrested. This happened twice in 2017. And they were probably two of my favorite days and fondest memories and live videos I did. So both times Bitcoin crashed 40%. People were scared as anything, but they turned out to be some of the best buying opportunities of all time. And I think people have very quickly bought the dip this week as well after that FUD came out. So let's just drop to some lower time frames, and we can see when we had this panic sell, weeks here, a little bit of volatility at the moment. I know a lot of traders are saying, look, technically this doesn't look too pretty. We want another leg down. If you get out some of our drawing tools here, look, you can make the argument that this is still in a downtrend, depending on how you want to draw it here. But honestly, I do think, so that's on the log scale there. I do think that sometimes you've got to get those technicals out the window. I think that when the stars align, everything that I've just spoken about, people buying $100 million of Bitcoin aren't too worried about the charts. So if we zoom out, big picture stuff on the weekly, I think you can make the case now that this blue, retest, take off, as soon as we get the weekly close above 11,500, I really think it's game on. We can go to 14,000 in a heartbeat. I do think we will, because of the lack of volatility for weeks and weeks now. I think if we do get that bullish weekly close, we shoot to 14K. So the question is just now, it's about the election, it's about the stimulus, it's about the stock market. If we have a nasty crash there, then yeah, crypto is probably not going to be able to perform really well. But other than that, geez, what an exciting time in crypto. Volatile on a Sunday night as I'm talking now. The whales always like to push markets up and ramp them down. So we have already seen a little bit of these Darth Maul wicks. But guys, I could not be more excited about the next few weeks and heading into next year. That's the level of US debt. So just show your friends and family that chart. Are your mates going to be earning $820,000 a year by 2030? And if they're not, maybe Bitcoin is a better place to park any money you have. So guys, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.